Many of us have retirement goals, and many of us want to retire early. At least, I think we do. That doesn't mean we have to stop working for those of you that love your job. It just means you're no longer required to work in order to make an income to survive. Building an investment portfolio that could help you retire and meet your financial goals in retirement is not something that happens overnight. It's something that takes time. But in today's video, I'm going to be diving into the power of compounding dividends and show you how SCHD, or the Schwab US Dividend Equity ETF, is going to play a major role in helping me retire early. Now, when it comes to me and my retirement goals, dividends play a massive role. But that doesn't mean I just invest in SCHD or I just invest in dividend stocks. I have plenty of growth stocks towards the top of my portfolio. It's all about diversification. In the comments section down below, let's take a quick poll. Just let me know simply, do you own any SCHD within your portfolio, or do you not have any exposure to SCHD? And while you're down there, smash that like button, subscribe to the channel, and share the video with a friend so we can push this out to as many people as possible. And with that being said, let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me thank today's video sponsor, which is the Motley Fool. The Motley Fool has a ton of great resources and products available for investors of all different levels. And right now, if you go to fool.com/Mark, you could sign up to receive their 10 best stocks to buy right now. All right, let's jump back into today's video, taking a look at how SCHD is going to help me reach my financial goals. They're going to play a major role in me not only retiring, but retiring early. Let's be honest though, I love what I do and I'll probably never retire. I love helping others build wealth. But let's make the video anyways. And right now, as we're speaking, I currently own roughly 200 shares of SCHD. And that pays me roughly $600 in annual dividend income. Now, $600 is not anything I'm going to retire on, but this is a process we'll be talking about. And by the end of the year, my goal is to attain 300 shares of SCHD in total. As you can see here, shares of SCHD currently trade at $83.52 per share. SCHD is a large ETF with assets under management of nearly $59 billion. And over the past 12 months, the ETF has risen nearly 15%. Pretty solid, and that does not even include its dividend. The performance of this ETF, especially when we are comparing to many other dividend ETFs over a long period of time, is typically unmatched. And when we compare to the S&P 500, it is very difficult for dividend-only, dividend-focused ETFs to beat the greater market, the S&P 500, because the S&P 500 has a great blend of growth stocks that don't pay dividends and dividend stocks. It usually takes a good combination of both, especially when we're looking at a total return, in order to even have a chance at beating the S&P 500. And that's exactly how my portfolio is constructed. And anyone who is an Edge Plus member for the Stock Investor's Edge, which you could see a link down in the description below, gets to see my portfolio update and my trade alerts every single month. And they will know that I have beaten the S&P 500 for 7 consecutive years and counting. SCHD has a lot to do with that. However, over the past few years, SCHD has lagged due to the fact that the technology boom we've been going through over the past 20 plus months. In 2023, the S&P 500 gained 23%, much to do with the technology sector. In 2024, the S&P 500 is up strong again on the backs of the technology sector. We have seen this technology boom, which is primarily due to all the focus on AI. Looking at this chart here, you can see just how the greater S&P 500 higher. Over the past 20 months, the S&P 500 is up 49%. However, when you look at the equal weighted S&P 500, it is up only 25%, half of the regular index. And when we add in the XLK, which is a technology sector-specific ETF, it is up 80%. This is not something that typically has staying power. Now, when we look out over a longer period of time, looking at the past decade leading up to the pandemic, the equal weighted S&P 500 was seemingly neck and neck with the greater index, we typically don't see this large of a gap like we see in 2024. However, prior to 2023, when we look at the S&P 500 over the past decade, which is going to be more of a normal market conditions, you're going to have recessions mixed in with a market boom overall. There was a little old dividend ETF that outperformed the greater index over that long period of time, and it was SCHD. SCHD provided a total return of over 260%, with the S&P 500 returning 220% over that same decade. So are we focused on just the past 20 months and that's just going to be normal moving forward? Or do you want to look at the past decade or decade plus? Which of them is going to be more normal moving forward? Now, I still, again, think that technology is going to be a key piece in the new rotation of the S&P 500. But there are so many other sectors that have lagged, that have a lot of catching up to do. And that plays right into the hands of SCHD. SCHD does lack much of that technology exposure, which is why I often say it is a great complement to a tech-heavy portfolio or tech-heavy ETFs that you might own. The top 5 sectors in SCHD include financials, healthcare, consumer staples, energy, and industrials. The SCHD portfolio currently consists of 103 positions, with the top 10 accounting for 41% of the total ETF. Those top 10 positions include Lockheed Martin, AbbVie, the Home Depot, Cisco Systems, BlackRock, Coca-Cola, Amgen, Texas Instruments, Bristol-Myers Squibb, and PepsiCo. A lot of great companies, and the ETF updates its holdings every year. Okay, now that we have refreshed ourselves on SCHD, the makeup of SCHD, the performance of SCHD, let's now take a look at how in the world is this ETF going to help me retire early. And let's begin by looking at the dividend. Looking here at the dividend stats, you can see that the ETF has been paying a growing dividend for 12 consecutive years, and they have a 5-year dividend growth rate of 13%, which is quite strong. Not only is the dividend increasing on an annual basis, it is doing so at a fast pace, which puts the power of compounding into overdrive. In terms of yield, the current dividend yield is 3.5%. If you've been following my channel for any amount of time now, you know that I love dividend stocks. And one of the primary reasons is due to the fact that I'm a big believer in the power of compounding dividends. But let me state it again, I don't just invest in dividend stocks. After all, my largest individual holding is the likes of Alphabet and Amazon. One doesn't even pay a dividend, the other just started paying a very small dividend. But now let's focus on that power of compounding. Let's start by going to my compounding dividend calculator, which is something that students who go through my 6-week investing accelerator program get access to. And if you're ever interested in working with me one-on-one to learn how to evaluate, analyze, and value stocks, then definitely check out that program. You can set up a free 15-minute information call using the link down in the description below. So as I mentioned, the goal is to have 300 shares of SCHD by the end of the year. So that's where we'll start. Right now, at the current price, 300 shares would cost roughly $25,000. But again, I've built up my position over the years, so my cost basis is much lower. But let's say we just start there, and let's say we have a goal of adding $1,000 per month. For some of you, it may be higher. For others, it may be lower, and that's perfectly fine. Do what works for you. Our average share price goal will be 8%. This is us saying that we believe that SCHD is going to grow 8% over the next few years. This is on an annual basis. So some years it'll be 10%, some years it'll be 5%, but we're going to say we're going to average around an 8%, which is on the lower end of the total market return. The current yield's at 3.5%, and we'll put 11% dividend growth. Let's say that I wanted to retire at age 50, which is about 13 years away. So as you can see on the chart, by the end of year 1, I'll generate roughly $875 in annual dividend income. And again, that is nothing to write home about. It's a good amount. It's a great chunk of change, but no one's retiring on $875 in annual dividend income. Well, that is going to continue to start growing. And what we do is we're going to be adding our monthly $1,000 per month. But in addition, those dividends that we're getting paid every single year, those are being reinvested to increase our share count. So our share count is increasing 2 ways here, through our reinvestment of dividends and through our regular additions to our SCHD investment. As the years go by, we go from $875, and a few years later, we're over $2,000. And by year 5, we're bringing in roughly $3,700 in annual dividend income. We continue this process of adding $1,000 per month and reinvesting those dividends, which increase our share count. And as our share count continues to increase, this ETF has shown their ability to increase their dividend payout each and every year. By year 10, we could see that we are bringing in over $11,000 in annual dividend income. And as I mentioned, if I had a goal of retiring around age 50, which would be 13 years away, I'm going to be bringing in close to $20,000 in annual dividend income. And please remember, these are estimates and a lot can sway from this, but we're just trying to get a ballpark idea. So if we're able to achieve close to $20,000 in annual dividend income, that would be fantastic. But again, you're probably wondering, Mark, who's going to live off of $20,000 per year, especially living here in Southern California? So let's break this down. How is this possible? Well, remember, SCHD is just a piece of my overall portfolio. It's a piece of the pie. It's a larger piece of the pie. It's my largest annual dividend income payer right now, and will probably continue to hold that top spot throughout this next 13 years or so. So make sure you take that in mind. So right now, when you look at the portfolio, SCHD makes up roughly 7% of total dividend income that I receive. But let's say, and let's be conservative here, let's say that over the time span, as I get closer to retirement, I'm going to start selling off some of my individual positions and going more into ETFs. So let's say it becomes a much larger piece of the pie. Let's say that my dividend income from SCHD accounts for 20% of all the dividend income I receive from my entire portfolio. And again, I believe that's quite conservative, but let's go with it. And if we earn $20,000 in annual dividend income, and that makes up 20% of total portfolio dividend income, that would project my annual dividend income in 13 years to hit my goal of $100,000 just from annual dividend payments. That is money I can choose to continue to reinvest. That is money I can choose to live off of, but that does not take into account me tapping into any dollars within my portfolio. That does not take into account any further capital appreciation. That does not take into account any of the option premium I'm making on a monthly basis right now, which is over $5,000 per month. This is just a piece of the overall retirement plan, a piece of the pie, a very large piece of the pie, but it's going to play a major role in me retiring early. So hopefully with this video here, you got a better understanding on how SCHD is going to help me and can build your portfolio, your dividend income over time. It's going to pay a great dividend. It's going to continue to focus on companies that increase their dividend, which then will help you utilize the power of compounding dividends. Now, this is just my situation here. Your situation may be a higher portfolio or a lower portfolio. But again, you do you. Don't focus on other people's goals. Make your own goals that fit your retirement, that fit your risk profile, that fit your financial goals. So again, I hope you enjoyed this video and were able to take something from it. If you haven't done so yet, please again, hit that like button down below, subscribe to the channel, and comment down below. Do you own any SCHD right now, or do you have no exposure to it down below? Again, I hope you enjoyed it, and we'll see you in the next one. Take care.